It's time for another Targets in Focus, which today is with Dr Valentin Hofstätter from Raiffeisen Bank in Austria. As head of bond market, fixed income and currency research at Raiffeisen, Dr Hofstätter specialises in the majors. But Raiffeisen are also experts on Central and Eastern European currencies. Thank you very much for talking, especially to Dukascopy TV, Valentine. Let's start with the euro-dollar. We saw lows again this week with a poor German Bund auction. How significant was that? And where do you see this pair heading at the end of this quarter and the next two?
I understand the short-term negative market reaction as if you want to spin it in a very negative way, you could say, well, now even the last man standing in the Eurozone, which was the German bond market, is being affected and investors are fleeing even the last market they dare to buy. I wouldn't interpret it so negatively. If you compare the German bond auctions for some time now have not always been filled in full. Readings of like 90% bid to cover were already happening before. So I would rather say it shows that the yield level is simply the absolute yield level is currently at levels where real money investors are pretty reluctant to commit a lot of funds. Therefore, also the effect on euro-dollar should be fleeting. I mean, we are back already now today at roughly 134, so recovering already from the losses. I think market is now more or less changing or digesting this first shock and thinking twice. I don't think this is the big problem. While we are actually still pessimistic on the euro against the US dollar, our forecast for year end is still the 130, which has been for the last months already. Despite all these ups and downs, we think the bias is to the downside with 130. Is simply that we see no fast improvement to the euro debt crisis. As at the same time in the US, the economic outlook is not bright, but much better than markets were fearing over the summer. And the current roughly 2% annualized GDP growth in the US is far, far better than what you see in the Eurozone.
On to euro sterling. What are the main drivers behind this pair at the moment, and where do you see it heading in the short, mid and long term?
Yeah, of course you also have UK topics. Of course you also have UK topics affecting euro sterling. Like, for instance, the prospect that you might soon see another round of quantitative easing by the Bank of England. The committee is already quite split on whether to do it or not, so it will not take much weaker data or continuing of the market turmoil and insecurity in financial markets to tip some members over, and then they have the majority for another round of quantitative easing. A lot of this, I would say, is already also priced in the pound already. Therefore, not making too much headway against the euro. But again, with our forecast of the Eurozone problems rather getting worse before they get better over the next weeks and maybe even months, this should also dominate euro pound. So we don't think we make it back to the 0.88 on a lasting basis, and we would rather expect this pair to make new lows, which is below the 0.85 we were recently, drop below the 0.85 over the next weeks.
On dollar-yen now, it reached a 2-week high this week. Where do you see this pair heading, and is it being affected most by yen intervention or by global problems?
So we have short-term movement to the upside in dollar-yen and then trickling down. I would expect this to continue. So we would wait for this pair to drop down to 76.5. Maybe even touching down again to the 76 level. And then I think the risk-reward is quite rewarding to get on the side of the Bank of Japan and prepare for intervention, which should again propel the currency up to 77.5, 78. And then, as I said, immediately after the intervention, 6 hours, 12 hours later, get out of the trade, because Bank of Japan alone will hardly be able and willing to drive up the pair much higher.
Finally, Raiffeisen are experts on CEE currencies. Hungary has come into focus in recent weeks with talks of their credit becoming junk status and an IMF loan. What is the latest on that, and how is that affecting the currency markets?
We think this is more or less an effort from Hungary to keep the IMF in play, to appeal to markets that they are trying to get money. I think they will try to play this as long as possible. As they do not qualify for any precautionary arrangement with the IMF, they would really have to get a standard procedure where they get money in exchange for measures taken by the Hungarian government. They are not willing, in our view, for the next months to take these steps, these measures, so they can only play on time and keep the discussion going on with the IMF, but we would not expect any concrete outcome there. Therefore, the support to the forint from this topic is more or less priced in. More would only come when they really reach an agreement with the IMF.
That's all we have time for today. Many thanks for joining us, Dr Hofstätter. As always, stay tuned to Dukascopy TV for more Targets in Focus. Goodbye.